Wow, next up, we're shifting back to corporate presentations, but I'm excited to welcome my good friend Brandon Macdonald here to stage. He's the president and CEO of Fireweed Zinc. They're working in the Yukon on the Macmillan Pass Project, and I'm quite excited to hear what you guys have planned for this summer. Thanks so much, Brandon.
Where's my clicker? Oh, there we go. Can't trust you with anything, Kai.
No, at least I didn't kick over the mat this time.
Thanks everyone for being here. I know we're all here at a precious metal conference, so you're wondering why is a zinc company presenting here? I think there's some similarities in the investment mindset of all of us who invest in precious metal assets, but in particular, I want to kind of start with a preamble here. Why zinc at all, and why Fireweed? I think there's been a lot of rhetoric around critical metals, and from most governments, it's been a little more than rhetoric, and at least in Canada until recently, when they've announced some funding availability for critical metal projects and special, super flow through for it. But it's meaningful. Zinc is an asset primarily used for galvanization of steel. When you look at China just announcing $3 trillion in infrastructure spending, the U.S. doing a couple trillion themselves. The total infrastructure stimulus coming out of COVID years globally is expected to be around 11 trillion. If you are an infrastructure bull, and it's hard not to be in the face of 11 trillion in infrastructure investment in the coming decade or so, you're a zinc bull. And in terms of undeveloped zinc assets, the cupboard is pretty bare, and our Macmillan Pass project is one of, if the not best, undeveloped zinc asset in the world. We just closed a financing, thankfully, the second tranche of it yesterday, after 2 months of waiting on some paperwork. But we priced that right before the market difficulties recently. So thankfully, we topped up the kitty with bringing us up to about 20 million in capital right before market struggles. So we've got a nice cash balance ahead of us here, and the lead order on that financing was Teck Resources, the third largest zinc miner in the world, as an endorsement that is pretty strong. Look, I'm not going to get into this. I think we all understand what zinc does, and I mentioned that its essential nature in terms of infrastructure development. But one of the things that is worth mentioning is that when you look at copper, copper, nickel, lithium, everything, China is undoubtedly a voracious consumer, a massive importer. But zinc is unique in terms of the major base metals in that they are also an extremely outsized producer of zinc. As we head into, I think we're heading into a real risk of serious resource nationalism in the coming decades, certainly coming out of the crisis in Ukraine and troubles with Russia. China is never going to share their zinc with the rest of the world. They're never going to be an exporter of concentrates or unrefined metal or refined metal. They use it internally. This should be of great concern to every country in the world. Because there is no modern society without zinc. You want to build a bridge and not galvanize it. That bridge lasts 3 years. Infrastructure in the U.S. crumbles enough as is with existing galvanization. So the critical metals push is not, as I said, it's not empty rhetoric, and it's good to see companies and countries getting serious about it. So the question is, where's our zinc coming from? And this is probably it. This is Yukon Territory, Canada. Interesting fact, Yukon Territory, famous for the gold rush. A higher dollar value of zinc has been exported out of Yukon than gold. Formerly the largest gold mine, or largest zinc mine in the world, at Faro, was in Yukon and exported quite a bit of zinc. So we're located on the eastern edge of Yukon Territory, road access. We're able to bring in heavy equipment now, which is a blessing in a territory that is otherwise usually infrastructure constrained. We have access in northern BC to railhead. We have deep sea ports in Skagway, Alaska, to send concentrate to either Asia or Teck smelter in British Columbia. 2018, we put out a resource, and this is a snapshot and a point in time. So the 2018 resource and PEA envisioned this as pretty big. Would potentially be one of the top 20 largest zinc mines in the world, probably around 15th largest. And a pretty massive metal endowment. And I would also note there almost 60 million ounces of silver, which I think is more than most of the silver companies here. So if you're strictly a precious metal investor, you can imagine this as a 60 million ounce silver deposit or project with $15 billion in boring base metal byproduct credits. But it is a dominantly payable. Zinc is the real meat of this project. So 450 million after-tax NPV, very healthy, long multi-cycle mine life, but so much has happened since then. And we look as an example of what these big projects can be worth, because you might think like, oh, base metals are boring. Well, the biggest all-cash takeout of any junior, a single asset junior in the last 10 years remains Arizona Mining, the $2.1 billion purchase by South 32. Great Bear was a massive success, but that was smaller, amazingly, right? So we forget that we may not be as excited by base metals as we are by precious, but these transact for very large dollars. So our 2018 resource saw us about 1/3 the size of Arizona Mining's Taylor Hermosa project at that point in time. But what I'm going to get into here is how much we've closed that gap, and how our resource update and economic study next year is going to have substantially closed it. And a lot of that has to do with the fact that when we did our 2018 PEA, we had 50 square kilometers. We've expanded that to 940 on the back of a theory which we've proven to be correct, that these deposits existed along a major crustal structure here, and the intersection of that fault and second order faults provided a fluid conduit for the formation of these deposits. So the 2018 PEA and resource only on Tom and Jason, but we've done a lot of drilling, particularly at Boundary and Boundary West in the center part of the project there since then, and that's going to turn out to be a real monster. And even beyond the known deposits, working on this theory that at these intersection of these local locus points of these faults, we have numerous other exploration targets. But let's talk about what we've done since 2018 and what that's going to mean for the PEA. And like I said, we're fully funded to deliver this PEA. So the updated PEA will be probably Q3 next year. You look at the 2018 PEA as a starting point, 450 million after-tax NPV. But what's happened since then? In 2020, right as the world was collapsing, and we were all at PDAC, the Yukon government announced with the federal government they were committing $71 million to our access roads to improve them. We had loaded about $100 million of capex in our last PEA into the improvements of those roads. So this commitment from the government, including a letter of support from them to say that they would look at the rest of the funding as the project matures, means that we've effectively knocked $100 million of capex off our 2018 PEA. And I'd also note that funding came through an MOU also with the First Nations. So in terms of an implicit endorsement of the project, that's pretty strong. And then since 2018 as well, as we've grown to know the project better, we've done a huge amount of engineering improvements at Tom and Jason, looking at significantly upsizing the starter pit at Tom. We've added a whole new zone at Tom called Tom North. In contrast to the way a lot of our peers in this industry operate, we used a lot of very conservative assumptions in our 2018 PEA. As I was complaining last night, we got no credit for that. But one of the things that we assumed was that 100% of our waste rock was acid generating and had to be treated as acid generating, which meant proper covered piles and lined storage facilities. We now have much more robust data and know that not anywhere near 100% will be PAG. So that helps the economics quite a bit. And at Tom and Jason, we've taken that nearly 50, slightly over 50 million ton resource, and we'll have expanded it significantly. And also improved it. We saw, for example, at Tom and what we call the Tom West zones, there were areas of historical drilling done by companies, in the 50s, where they had very, very small diameter drill holes, incredibly poor recovery, and the poor recovery of core was particularly an issue in the high grade zones, because the high galena zones were particularly friable, so the drill, rather than producing nice core, would destroy it, and the drill water would wash away the high-grade material. So when we twinned old holes, we found substantial uplift in grade, because we came in with a nice big HQ drill holes and got basically 95 to 100% recovery and saw substantial grade uplift. And then the big one is Boundary Zone in the center part of the project there. This is a zone that hits 230-meter true width intersections of nearly 5% zinc, and locally has intersections of 6 meters of 42% zinc. This is an extremely interesting zone, and we took a gravity survey in 2020, expanded the footprint of it to the west, and drilled there and discovered what we call Boundary West, which has some very exciting grade. We hit an intersection there last year and discovered a new horizon. That intersection, 10 meters of 24% zinc. So Boundary and Boundary West have not just these truly massive from surface intersections of these mineralization, so rapidly proving up significant open pit tonnage. It also has these local areas of significant grade. So that's going to make a big difference to the NPV. And then of course we have all this exploration potential there, which we're this is a bit of a Hollywood problem, but we have far more targets than we have the attention to drill. And in fact, this particular year, I don't think we'll be testing any of the new targets because we're really focused on delivering the resource update. But it's a good problem to have that we have so many of these targets, and it does not go unnoticed by the majors such as Teck when they invest. So what is that up to? You take the $450 million after-tax NPV from before, take $100 million off the capex, you improve the pit sizing at Tom, you expand the resource at Tom and Jason, you add boundary zone. All of these things lead to more NPV, which means more NAV, which means a higher value company. And what we're honestly targeting for that delivery in probably Q3 next year for our study is likely a doubling of the NPV from before, possibly a plus $1 billion after-tax NPV. The term Tier 1 gets thrown around a lot. So what does a Tier 1 zinc project look like? I think it's one that would be top 10 or 15 producer, need a long multi-cycle mine life, and it would need to be in the first half of the cost curve. Those are stretch goals for us, but I think there's a realistic chance that we can hit them. And if we do, it would be pretty hard to argue that there's a better project out there that hasn't been developed for zinc. So that's where we're at. So look, this is the most exciting year of the company. We are cashed up. We've got a lot of drilling, our biggest ever drill program this year, fresh resource next year, and an updated PEA thereafter. And I would just remind people that Arizona Mining, which got bought for $2 billion, went from 20 cents to $6 in 2.5 years. And it wasn't because they made a discovery during that time. It was because the market finally woke up to the value of that company. Established companies and not just exploration companies can be 10, 20, 30 baggers. And that's what we're hoping happens here as the market finally wakes up to the potential of this project. We think we're sitting on a hell of a company here. Thank you very much. Open up questions. Rob?
Just remind me, in Arizona, were they bought at what stage were they bought at?
PFS, yeah, and then actually South 32 backed it up and redid it as a PEA. They've been slowly progressing there. But that's a classic example of you engineer it a certain way as a junior, and then major comes in and says, no, we're gonna redo it our way.
Brandon, do you think these type of deposits are the largest zinc type deposits in the world? And as a geo, you're just not supposed to look forward too much. But how big ultimately do you think the endowment of this system could be? Could this be like Sullivan size SEDEX and hundreds of millions of tons? Do you think?
Yeah, I think so.
On this deposit.
Yeah. Well, look, I mean. It deposits really, but I suspect this is the sort of mine that has a 20-year reserve for 40 years or so, right? Where it actually ends up, you launch the company with an expected, or you build the mine with a 20-year mine life, and then it actually finally shuts down 60 years later. That's I think the kind of scale that this could be. I mean, who knows? I mean, we're literally scratching the surface because there's all sorts of deep targets here as well.
Second question would be, are you seeing more diversified miner corporates? You have Teck in there and Hud Bay. Are any of the big diversified miners taking another look or looking to expand their zinc portfolio like any of the big 4 or 5 companies?
Teck was not our only option, is what I'll say. But yeah, it's there's a lot of increased interest. And the question is, when do these big diversified miners enter the M&A cycle? Their corp dev teams have been furiously trying to spin out assets the last couple of years. And I think that there's a point where the CEOs get pressure from the fund managers for growth. So the CEOs pressure their corp dev team to find something. And that's ideally when you want to sell, when they're under pressure to make a deal happen, because that's when bidding wars occur.
Fantastic. Brandon, I need to pressure you off
Yeah,
the stage
no problem.
now. Thank you so much. It was a great presentation. No, thanks for joining us. Really appreciate it.